That's a huge number. So guys, this is how you get multi-baggers. We separated the stock from the price, the company from the price. We're like, hey, a lot of good things have to happen for that to happen. The pendulum swings. Is Meta, formerly Facebook, a multi-bagger value play? So first off, Mo, what's a multi-bagger?
Stock that compounds on itself over a very, very long period of time, whether it's 5, 10, 100.
100 times.
Times its money. Times its money.
A 10-bagger would be a stock that went up 10 times.
10 times its money. Yep.
So how do you generate these multi-baggers? Like when you're buying a stock, what are you buying?
A piece of a company.
Right. So how do you get a multi-bagger?
You have to me, you need to find smaller companies that have the opportunity to compound on themselves over and over and over.
Or
you're in
So I just read the book 100 Baggers, and it was really eye-opening.
Yeah.
What it found was you also could have to find a situation in which you buy a company that's selling for 8 times. Let me put it on here. Let's say, for example, you have a company, and in year 1, it's earning $10 per share.
Okay.
And in year 20, it's earning $50 per share.
Okay.
In year 1, it's selling for 8 times earnings. What's the price of the stock?
80.
And in year 20, it's so big and so awesome, it's selling for 20 times earnings. What's the stock price?
2,000.
20 times 50 is 1,000.
1,000.
So what'd you get here? You got basically a 12.5 bagger. Well, how'd you do that? Earnings only went up 5 times, but the multiple went up a lot. So when it comes to Facebook, here's what I love about the story of Facebook. Mo, what attracted us to Facebook? What's the initial attraction of Facebook in terms of price movement?
Oh, the big fall. The day that it fell, what was that, 40% or something? That was on, let me see, what was that date? I think it was sometime in early 2022. It was that earnings day, and it fell 22%. Was it
January? Something like that.
January?
So Facebook, if you look at our past videos, I don't think we weren't proponents of Facebook at 380. I think it's the peak it got.
No, but it was funny because, 384.
September 1st, 2021.
But it was funny because we liked Facebook. We just didn't like the price.
So that's the big thing. We separated the stock from the price, the company from the price. We're like, hey, a lot of good things have to happen for that to happen. Then all of a sudden they reported lack of growth, blah, blah, blah. All of a sudden the stock is now down. In the last year, 64%. My cost basis is like a little under 200 right now. So I'm taking a big hit on it right now. And again, just because I own it, don't go out and buy it. That's absolutely the wrong thing to do. Do your own analysis. Do your own analysis.
That big fall was in February of 2022.
Okay. So.
Wow.
Now, what would make this a multi-bagger? Well, let's go look at currently right now. The stock is currently selling for 12 times the 5 years earnings, 13 times the last 5 years free cash flow. Look at this. Current PE is 11.
Whew. Who would have thought?
Yeah, who would have thought? I didn't think that Facebook would fall to 115. It got as low as $88 just recently. So you look at there and say, okay, is it a multi-bagger? Well, how do you get multi-baggers? Well, first off, let's go to our stock analyzer tool. Let's go to a 20-year analysis. So our stock analyzer tool, if you're new to this video, our channel, and remember, guys, a lot of this is going to sound overwhelming. It isn't. We have 2,000 videos. You just have to repeat it. If a little bit of it makes sense to you, and one of the main things is when you buy an investment, your return is going to end up being the present value of all the cash that comes in. So when you buy a company for $1 billion, what your return is going to end up being is take all the cash flow you can get in the future, take it to today, and that's your return. Okay? If you believe that, you're on the right path. If you don't believe that, but that makes sense, what you got to remember is in the short run, stocks are a voting machine. In the long run, they're a weighing machine. Mo, pull up the chart for Facebook one more time for 5 years.
Okay. See here, 5-year run
right there,
minus 33.5%.
So look at the short run.
Yeah, look at this. This is the. I'm going to go short run, just basically,
and go from April of 2020 right here and up. Short run, voting machine, very popular. Short run. So guys, if you believe it's possible for stocks to be grossly undervalued and or overvalued, you have to believe the opposite as well. Yeah. Right.
The pendulum swing.
The pendulum swings. So the question is, if it can go up so much that it doesn't make sense, it can go down so much that it doesn't make sense. What you need to remember is you're buying a company, and that company's price, Mr. Market, every single day is going to tell you, here's the price of the company. You need to decide if you're a buyer, seller, or holder of that company. So when we go to our stock analyzer tool, we're going to sit there and make these revenue growth assumptions for the next 20 years. I'm going to go conservative and then more aggressive as I go higher. So I'm going to go with 4%, 8% and 12%. Let's say the meta completely works and it crushes it. The metaverse works, it's awesome. Okay, profit margin. Let's say the metaverse doesn't work and their profits have been cut because of their big spend on meta.
Metaverse, $10 billion a year.
So let's go 22, which is lower than they've had in the last, let's go 20, 25, and 30. Okay. 20, 25, and 30 on free cash flow because it's going to be the same. Now let's go with PE. Now, the one thing I like about Meta, what's their return on invested capital?
Oh, like 16.9%, is it?
So guys, this is how you get multi-baggers. They're able to invest the money, invest in the business at higher rates of return. If they can keep doing that, which they should be able to with social media in that advertising space, you can get, that's how you get the compounding effect of the margin. So we're being conservative here on that stuff. So you have to apply a higher PE when the revenue growth and or the return that they get on the money invested in the business is very, very high. The market overall is about 10%. They're at 16.9% over the last 5 years, 15% in the last year. That's a huge number. So I'm going to go with 15, 17, and 19.
Agree.
Now, finally, desired annual return. Guys, the lower the assumptions, the lower your return needs to be because you're already being conservative. This is your margin of safety. And remember, overall, you can get 9 or 10% by investing in the market. So that should be your baseline. But I put in 12, 15, 18%.
Because the 18% is really high, but the metaverse has to work.
And those assumptions are very, very high along with it. All right. So let's hit the analyze button. If you're going to able to make 18% a year, buying it at 247. Now, this assumes cash flow, so it's not exactly going to lead directly to the price of the stock, but overall with cash and everything like that, 1.18 to the 20th power times 245. That makes the stock and its cash flows equal to $6,700 at some point. That's a 30 bagger. Yeah. Now, again, it has to work out very, very well for that to happen. That's why we don't assume that. But on my low assumptions, I see 12% a year for 20 years. That alone will be a multi-bagger. And that's how you sit here and find these multi-baggers. When I look at Meta has the potential for being a multi-bagger just based on how cheap the stock is selling for. You have to get a cheap stock at a low multiple and have the market absolutely hate it. And I think you're seeing that a lot with Meta, as is evidence. What was that, Mo?
You have all of that right now.
Exactly. And somebody, go ahead.
You have a high ROIC. You have the long runway. I mean, you have 3 billion people using some type of Meta platform, whether it be Facebook.
And they haven't maximized the ad dollars on those people.
No, they haven't. Oculus, Instagram, WhatsApp. I mean, it's absolutely incredible. And that's only half the globe doesn't have internet.
That's exactly it.
Half the globe doesn't have a phone.
And that, to me, that's the major factor with Facebook. It still has a lot more run to go based on getting revenue per user up and up and up. That to me is where, now Monish Pabrai thinks that Facebook, a year ago, he said it's an obvious double. And it was a year ago, it was that. No, it wasn't a year ago. When did he say it?
It was when we had the big fall. So February, he said it.
Okay.
It was right after that.
Now Monish could be right. He could be wrong. Who knows? But I look at it saying, if he's right, it takes Meta today at a four bagger almost from today's price. Again, don't go buy it for that reason. Go make sure you understand the numbers and understand what you're talking about. Make your own investment decisions. Prime example, I think Warren Buffett's the best investor of all time. We were looking at his portfolio earlier this year and they had Verizon. And Mo and I kept saying, what the hell? I don't see it. And guess what I did? I skipped Verizon.
Yeah.
I didn't buy it because I didn't understand how he got there.
Yeah. There's a lot of things we don't get.
Monish.
Oxy. I don't get Monish buying Micron when he did.
At 90, he was a bull on Micron at 90. We were like, we couldn't get it.
I don't get it. But
Gary, a friend of ours, Gary, who's a great value investor, he likes a company that I'm like, I don't get this company. Yeah. I don't chase what other people do. Now, do I use it as validation? Sure. Alibaba, I liked it a lot. And then when I saw Charlie Munger liked Alibaba and was okay with the risk from China, it made me feel better. But I'm not buying it just because Charlie Munger has it. That's the big key. So when it comes to Meta, guys, there is an uncertain future. There is in all companies. But the question becomes, if you think Meta will be around for the foreseeable future, will have more revenue and profit over the next 10 or 20 year or foreseeable future, and you can buy it for a good value, that's always the hardest one to answer yes to. And I think that answer today is yes. Based on that, then what are you doing? Now, again, don't buy it just because I'm buying it. Don't buy it just because of this video. The point is, I believe Meta is going to be multi-bagger. I don't know where this price is going to go, though. This could very easily go way lower than it's already been.
$50, who knows?
Because I think the future of the NASDAQ is going to be very, very tough for the next few years.
And this thing will not be, it won't be immune to that fall.
And if it falls to that $80, I'm down 60%. And guess what I'm going to do?
Buy more.
Buy more shares. That's the way I look at it. That's how I look at these companies. I look at them as a present value of all future cash flow. And hopefully when I wake up 10 years from now, I'm going to say like, thank God I bought that. Not, oh crap. That's the point. When you have that ample margin of safety, even when you're wrong, you're not going to lose a lot of money, if anything at all. Because I think with Meta, even though I'm wrong in these assumptions, it can still make money over time and still be okay. Just like Warren Buffett's had with some of his investments. Coca-Cola hasn't been this crushing investment.
No, it hasn't been.
But he's made a few 5, 6, 7% with dividend. I don't know what the number is, but he hasn't crushed it with Coke. So anyways, guys, if this makes sense to you, subscribe to the channel. Just remember, don't buy anything just because we buy it. Do your own research. Do everything that you need to do to understand it. If you don't understand it, you don't buy it. Thanks very much for your time.